Our next session is on co-lending and the role of tech platforms. This session explores the crucial role technology plays in co-lending, from enhancing credit access to managing risk. We invite our speakers to share how innovations like AI, machine learning, and blockchain are shaping this field. For this session, I would like to invite our panel of speakers, beginning with the moderator, Mr. Shashank Sharma, Director, ScoreMe Solutions Private Limited. Please bring your hands together, everyone. In 2017, alongside Mr. Jyoti Prakash Kadia, he co-founded ScoreMe Solutions Private Limited, aiming to develop paperless credit delivery and monitoring solutions. His leadership has been pivotal in establishing ScoreMe Solutions Private Limited as a trusted partner for over 200 institutions, including banks, NBFCs, and Fintechs. Please join me in welcoming him to the stage. Our very first speaker is Mr. Rajjat Gulati, CEO and co-founder, Plutos One Technology Private Limited. Plutos One, headed by Mr. Gulati, is a leading payments infrastructure firm providing digital bill payment solutions to banks. An IIM Ahmedabad alumnus and computer science engineer, Mr. Gulati is a third-time entrepreneur with previous ventures in F&B and IoT. He has also led product development in EdTech and served as Group CEO of a consulting firm, advising startups in robotics, EdTechs, and PropTechs. We welcome you, sir. Our next speaker is Mr. Sharad Agrawal, CO&TO, Ugro Capital. Mr. Sharad Agrawal, a veteran with over 26 years in BFSI, renowned for establishing fintech startups and leading digital transformation, he is a recipient of the NBFC Leadership Award and brings deep industry insights as a former Gartner Research Forum member and Capstone Certified Professional. Please bring your hands together for him. Thank you. Next up is Ms. Bhavna Sharma, Principal Consultant, Lentra. Ms. Sharma is a distinguished thought leader with over 12 years of experience in the BFSI sector, spanning consulting, banking, and leading product firms, both in India and internationally. With credentials in computer science engineering, an MBA in finance, and an LLB, she expertly drives transformative digital lending solutions that align technology with business objectives. We welcome you, ma'am. Next is Mr. Sudeep Garg, VP, Nucleus Software Exports Limited. He is a seasoned IT executive and lending expert with over 31 years of global experience in software product development and consulting for top banks and NBFCs. Over his 3-decade tenure with Nucleus, he pioneered one of the first indigenous global products in the lending domain, leading implementations across Asia, Europe, and the Middle East. Next, Mr. Rahul Jain, ED and co-founder, AllCloud Enterprises Solutions Private Limited. With over 12 years of expertise in scaling enterprise businesses, an alumnus of the Australian Graduate School of Entrepreneurship, he leads business, finance, and marketing, driving AllCloud's mission to transform lending with secure, scalable technology. We welcome you, sir. Coming up next, Mr. Sood, co-head Yubi's Financial Services Group. Mr. Sood oversees revenue growth and manages the P&L for Yubi's primary platforms, including Yubi Co-Lend and Yubi Invest. In addition to leading cross-platform initiatives, with over a decade of expertise in financial services, he brings a strong background in structured finance and high-impact lending partnerships, having previously held pivotal roles at Vivruti Capital and Northern Arc Capital. We welcome you, sir. Our last speaker for this panel is Mr. Utham R., CEO, Saison, Omni India Private Limited. Mr. Utham holds an experience of more than 18 years in technology and financial services across the UK and India. A specialist in product management and strategy, he has led the development of innovative products such as loan applications and data analytics platform. Mr. Utham holds a master's from the London School of Economics and Political Science. We welcome you, sir. I would now like to hand over the mic to our moderator to proceed with the session, Mr. Shashank.
Hello. Thank you, Anupriya. Please. Thanks. Very good afternoon to everyone, and thank you for being patient during the transition. I would, on behalf of AFAI, I would like to congratulate the entire team for setting up this August presence here. And I think what better panel could we have to talk about the role of platforms when we have, veterans from the industry in terms of who have conceptualized platforms around different use cases. And since morning, we've been hearing a lot about, data getting exchanged, partnerships becoming the way forward, and co-lending taking the deepest shape in the country, which we have so far. But what I truly believe is that, such, I would say, ecosystem cannot function without an efficient technology platform in between. And with India getting more digitized, and we hearing about digital lending solutions on a daily basis, I think co-lending is one subject which definitely needs the, I would say, serious attention of both the stakeholders from NBFC as well as the bank side, to look at a scenario that how this technology role play can take a better shape. And I think to discuss on the current objective is where we have the panel. Since we have a mix of NBFC and the platforms, I would like to start from the NBFC side. So Sharad, just a quick one to you, that, how do you think that the role of the platforms in the NBFCs is evolving, and overall on the co-lending aspect, sharing your experience being one of the leading NBFCs working in the co-lending side, how is your experience so far, and how do you think that, the industry is going to evolve around this? Thanks.
Hi, my name is Sharad. Okay, I would say, without technology, co-lending cannot work. Okay, and Agrawal is a story. Okay, we have a 50% of our book is co-lending book. Okay, and I would say a few good things which we did ourselves. Okay, and what can be done further, right? The one of thing is that, we have our in-house capability of our, rule engines, right? So any loan comes to our system, it automatically tells us which partner it will get qualified. Okay, it's the beauty of system. On day one, whatever we do business, we know that where we can send this case. Okay, which I would say our platform providers can improve upon. Okay, second piece is that we have a dedicated business solutions group. Okay, sitting on day in day out in bank premises, NBFC premises, and ensures that all clarifications are sorted out, and bank officials, they have a lot of business also to do, and they have a lot of queries because we come from NBFC background, right? So a lot of questions comes on, different kind of products, their policies, all that. The team is dedicated and sitting in the premises and ensure that it's sorted out, okay? And of course, we have a lot of, bouquet of products. So we have all kind of MSME product, whether you call it EV, solar, machinery, secured, unsecured, right? Okay, and there's a dedicated strategy which we have developed ourselves, okay, and accordingly our partners, so which bank does which product, right? Which NBFC does which product, right? It's our dedicated strategy, distribution strategy around that, and ensure that is month on month delivered. Okay, it's a target-oriented approach, okay, and of course that our platform helps, right? It's a fully API integrated, platforms, okay, and our internal processes are fully digital process, okay, complete onboarding process, and we understand even banks platform through our fintech partners. So we know from our experience that what kind of KYC loans will get qualified, what kind of legal report for secure loan will get qualified. Okay, so there's a learning which we impart to our ground team and ensure that those cases are only flow into our system, which will get qualified, and whatever business we have to do in our books, we keep it. Okay, so these are the learnings which we are implementing, and of course, a lot of things I do see that industry is evolving till dispersal process, right? A lot of things need to improve upon post-disbursal process through these fintech partners, right? Okay, the repayments, reconciliation, right? Compliances, RBI is coming very heavily on compliances, KYC norms, okay, etc., etc. So I think, and of course, there's a unified digital interface, I would say, required. Okay. But why I'm saying there are partners, right? There are in between partners available. And if there is any rejection happening, partners should be able to tell us this case will qualify where, right? They know from our experience, right? We have tied up with multiple banks and partners, but that case stopped there. So that's something which we developed ourselves. Okay. So there's a partner's opportunity, they can do that. Okay. And of course, in our experience, direct integration really helps. We have done a lot of direct integration with banks, which speed up the process.
So I think that's a very minute way of handling the entire core challenges which today lie between the NBFCs and the bank on that front. And congratulations to you on the successful implementation of the platforms here. And we'll come back in the second round to discuss more upon how adoption we can deeply inculcate. Moving on to you, Utham, I think so. Probably now we'll move towards how platforms are taking the shape, and how do you think that there is a more deeper role which these platforms can play in between, because we've heard from Sharad that he has pinpointedly taken up each and every use case and very minutely implemented it internally at Ugro to come to the stage of an end-to-end automation. So how do you think that at an overall industry level we can have a more deeper role of platforms getting played there?
Sure. Thanks for the question. A bit of a storyteller, so try and
go
cut
ahead.
me
No
off.
issues.
Yeah. So actually, way back in 2015 was when I actually built the first co-lending platform when I was at Capital Float. We used to work with a bunch of different NBFCs for co-lending. This obviously has evolved way ahead now. What we did at Credit Saison, the NBFC arm, was we did about 20-25 different partnerships. In those partnerships, every month we kept facing a reconciliation issue. And the governance in the Japanese entity is tremendously high, right? And keeping that in mind, we built this tool to ensure that accuracy to the rupee, we are reconciling with every single entity that we work with. And this is all NBFC to NBFC or a fintech to NBFC co-lending, right? Tried and tested, this model worked beautifully on a 6,000 crore book. What we did was then it came to birth the tech entity of the Saison group. We sold the platform off to the tech entity. Now we offer this entire platform to different NBFCs and banks. So today in the morning, somebody was talking about reconciliations being an issue, right? I don't know if this is still an issue today. Maybe to clients it is an issue, but as a platform we've solved it. And our clients today on our platform are quite happy with it. Now that's one technology advancement of the platform that needs to happen, right? Because each one has their own logics in terms of IPC logic, or how they treat different scenarios, or how they treat different payments and structures, etc. So it's all configurable, and that's how we sort of manage this. Being conservative, I erred on the conservative side. None of our deployments today sit on public cloud. Everything is RE to RE. Everything is on an RE's instance. And that's important in terms of how this co-lending platform also should evolve, because customer information, which is public, PII information, right, shouldn't be public. And especially with a very strong regulator like RBI, you have to err on the side of conservation, right? And today all our deployments that way are between, private clouds or, in-house service that, entities put together. Being disciplined in terms of compliance, being disciplined in terms of, accuracy of data, being disciplined in terms of process, in terms of efficiencies that we need to achieve, insights in terms of the data that needs to come through for an NBFC and bank is super essential. So to ensure that, right, you need to have a customer success team. For me and for any platform out there, you have to become a partner with both the bank and an NBFC. It's just not a bank NBFC partnership. As a technology, you have to become a partner. The day you think you've implemented a solution and that's it, I don't think it works efficiently, right? Because this model, the products are evolving, customers are evolving, the process is evolving. You cannot just be a solution provider, deploy and move away. You have to ensure the success of both entities. So that's how I see technology evolving in this space. Waiting to see how more guidelines come on this, but interesting times. I love the challenges.
Thank you. I think so very minutely when you mentioned that on-premise is something which you have taken very seriously internally, and your key facts on giving compliances the utmost importance, that has really helped you there. So we'll definitely catch up that how these can become a better adoption sources. Well, you do mention about the regulator and the data privacy as well. So I'll move to the other side of the panel. So Bhavna, over to you. And I think I'll just like to hear your thoughts upon what do you think that the regulatory changes which are there in the ecosystem today can elevate the role of these tech platforms and can enable these NBFCs and banks to come closer to each other and integrate at a faster pace.
Thanks for the question. So I would like to start by stating that though there are detailed guidelines on co-lending by RBI, but I do see there's still a lot of room for the interpretation, right? Because apart from the guidelines, there are references to the PSL guidelines, DLG guidelines, or TLE guidelines, and then there are co-lending guidelines. So one system has to be mature enough to be compliant to all of these, right? Not just the co-lending guidelines. And when, and coming to the co-lending guidelines, RBI says, there should be a synchronization of the data between both the co-lenders. So there is a need of, real-time data exchange in order to be compliant with the, obviously, as my counterpart spoke about, the data privacy, that, the data at rest and data at transit should be encrypted. So all of those things should be taken care of. And there are a lot of opportunities that I see for the platform providers that, what they already are doing for the sole lending and bring up to the platforms of the co-lending as well. Now, if I talk about the reporting, there is no such guideline that, the reporting should be done by both. Again, it's on the discretion of the partnership agreements between both the co-lenders, whether, the NBFC wants to do the reporting or both want to do the reporting. So now here, there are some refinements that I can foresee, in the guidelines by the RBI, because if both are doing the reporting, then this will end up the borrowing getting reported twice, or the borrowing will having two loans, right? So these sort of refinement would be there along with reporting. Then I'm coming to the next side of the things is the accounting, right? Now, which is the most painful area for most of the NBFCs, not the banks, because again for CLM1 and CLM2 model, it will be different, right? So CLM1, if I talk about 20-80%, okay, I have to do accounting of my 20%, they will do for 80%. What about CLM2, where I'm funding 100% now, and I'm not sure when my 80% portfolio is going to be sold, sell down. So I have to be ready for my, off-balance sheet accounting as well. So all the platforms, there is a lot of room to scale up, right? These are the challenges that we see that, a lot of the NBFCs and the banks are facing in terms of reconciliation. Obviously, the platforms are intelligent enough to, configure the IPC or IRAC norms. But again, it will different from the partner to partner. The bank would say that I do IPC. The NBFC would say that, I do ICP. Now, once, in previous sessions, or one of the, the speaker said that, at one side, the books are clear. At the other side, the borrower is reported as NPA or SMA. So these challenges will be there unless you have a real-time data, exchange happening. So for that, there should be a middleware where, both NBFC and the partners are talking. The transactions, not just the, the origination part or the sending of the document or sharing the onboarding for, things or the data pointers. There should be, real-time exchange of data on the servicing side as well. That's what I see. And that is only possible, when the platform platforms are, taking or catering to the end-to-end, the entire ecosystem, and not just, the onboarding part or the servicing part. I do see a lot of refinement, coming forward from RBI, be it data privacy, be it reporting, be it, how the accounting should happen, be how you should, clean up the, books. And yes, obviously, I'm not blaming that, people do, NBFC side, people do go for unfair practices, just to show that the balance sheets are clean. It's maybe because they have to do some arrangements, right? Because now I have provision for 20%, but I'm not finding buyer for my entire portfolio. How would I, I have to do some adjustments, and then there is scrutiny. So obviously all these things, taking, in account the RBI policies, the guidelines and everything should be there in your technology systems that, are supporting the co-lending. And we, do support one of the largest PSU. I would not name, but I would leave it up to you to figure out from the logos behind. So we are already, doing co-lending, supporting co-lending portfolio of one of the largest PSU. And I think, eventually the policies are maturing, the practices are maturing, and I'm sure the regulations are also, they will be mature.
Thanks for your views. I think you did mention about how different partner approvals are to be handled on the platform, and how accounting is to be taken care of that. I think we'll come back to Sharad on that part in the later part of the session. And I think just to break the scrutiny here, so Rajjat, I'll move to you. Since Sharad mentioned that a key role which today implementation has helped them to take is the implementation of the business rule engines module, and how different partners evaluate the end customers onto different credit policies. Well, any thoughts on how can transaction-based small credit ratings can be utilized in terms of assessing customers for the onboarding in co-lending, and if you can just share your views on that. Yeah.
Thanks, Shashank. That's actually an interesting question, and our approach to it. So again, I'll borrow a page out of Utham's book maybe and tell you a little bit of story. We didn't come at it from a lending point of view. When we set up Plutos One, the founder team has about 14 years experience working with the banks here. So we've always been looking at it from what's the bank's pain point, and whether it sits under lending, whether it sits under some other domain, Plutos One was designed to try and solve it. So what we are is we're a payments infrastructure solutions provider to the bank. So currently we work as a Bharat Connect TSP for a couple of banks. We run the switches that operate their bill payments for them. But we also provide the solutions then to their corporate accounts, so MFIs, etc. We are essentially the interface between the MFI and the customer. So a couple of interesting things happen here, right? It gives you access to a lot of granular data. So a lot of loan repayments, for example, are happening through the Bharat Connect platform, right? So when we move from the origination, the issuance to the actual collections piece, you realize that the most seamless, painless way of doing that is to make a consumer-friendly platform that they can use on a daily basis to be able to make those payments as well. And the more integrated it is into the final beneficiary's life, their flow through the day, the easier it is and the higher the rate of redemption, the lower the NPS. But what it also did was it gave us the idea, and this is and almost everything that we do is built atop the rails that NPCI builds. So there are regulators, there are partners. What we realized was that if you're going to, the main thesis behind co-lending was to be able to take credit to where credit was not being delivered previously, right? That's the basic thesis. But with that comes the realization that if you're going to go after a new TG, you're going to issue new credit, you have to have different new data points to be able to incorporate new rules, right? And new sources of that data. And look, let's be honest, when we go apply for a home loan, right, for a large ticket loan, we dress up our financials a little bit. Everybody does it, right? It needs to be presented the right way. And that's a once in a lifetime sort of transaction where you're taking an effort to make the presentation the right way. And I would say that it's not necessarily the most accurate picture of the applicant's financial state. The most sort of accurate, okay, let's put it this way. The more accurate you want to go after the more frequent transactions, right? The more compulsory transactions. And those transactions, to us, the most frequent, compulsory, and low-ticket transactions that actually give us granular data were bill payments. right? We're all making bill payments. You could be anybody, you're still making bill payments. You're paying rent for the house, you're paying for your phone, you're paying for your landlines, whatever it is that you're paying for. So because we are operating the bill payment switch and the bill payments interfaces for consumers, on behalf of the banks, that gives us access to a lot more data. And using that data as inputs into a lending decision just makes that decision way more robust, right? We're still building out some of the rules there, right? But having access to data is a definite plus, and I would think everybody would agree that the more data you have, the better decision that you can arrive at. But obviously, that's an incremental effort. You get to the data, you make the rules, you actually test it out to see if there is a correlation there, and then you build out the lending on top of it. And we're currently at that stage with some of our partners.
Well, interesting to see that, the small data points, even at the transaction-based bill payment systems, getting utilized as a form of underwriting assessment models. I think that can certainly might be used at the low ticket size lending sizes there. Thanks, Rajjat, for that. I'll move on to you, Arjun. And I think, so we've talked about middleware implementations, we've talked about BREs, we've talked about bill payment based data getting utilized here. Now, one interesting fact is that ultimately this platform has to go and, get integrated with the loan management system. So how do you envisage that, any operational level challenges which you have already dealt for and which can be beneficial for the audience here to understand that, how that can be taken up at a more seamless manner? Your thoughts on that? Thanks.
Thanks for the question. Hi, good afternoon, everyone. Now, I'll go back a bit into 2018 when the co-origination guidelines were released by the Reserve
take the
Bank.
mic a little up.
Yeah, when the co-origination guidelines were released by the Reserve Bank of India, and the objective was to take credit to the segments where credit is not there and to take it at a cost where the cost of borrowing reduces and they move away from the traditional money lenders. That model did not pick up because of inherent issues that a blended rate of loan had to be given to a customer and two systems were not talking to each other and reconciliation was a nightmare. Then in November 2020, the guidelines on co-lending came out, which was more pragmatic and more practical on how two institutions can partner with each other in co-lending model 1 and in co-lending model 2. At Yubi, we had an advantage, we had early mover advantage because our platform was ready because we were already doing it between two REs. Now, the problem of this is twofold, right? And I would like you to visualize this in two ecosystems. That one is a bank ecosystem. So the bank ecosystem is a 50-year-old ecosystem, lakhs of employees, thousands of branches, well laid out hierarchies and well laid out processes and very little scope of deviations in the processes. While on the other hand, you have an NBFC ecosystem, right? So imagine an NBFC which is 10 years old. They have cracked a particular customer segment which is not being served by a bank, and they have cracked the underwriting methodology using assessed income, right? Or by talking to the customer when the field staff talks to them. NBFCs are more agile and they are also operating at a certain NIM. Now, getting both of these institutions to co-lend is an operational nightmare, if I may use that word. Now, breaking it down further, first, how do these two institutions define or agree that this is going to be the partner in my journey? And co-lending partnership is something which is not a transaction based, like what happens in let's say a direct assignment or a pass-through certificate transaction. It's a partnership which is going to continue till the institutions continue, right? The second question is, and the challenge is that how do you align these two institutions in the data that you're collecting from the customers, the assessment methodologies, and the underwriting standards that are being used, right? Very, very different. We have integrated with private banks, foreign banks, and PSUs. For a LAP product, in one bank we have 1,800 data fields, and in some other bank we have only 700 data fields. Right? The third thing is how do you adhere to a TAT of disbursement? In co-lending model 1, if the disbursement TAT increases, your customer goes away. Right? And the customer experience is destroyed. In co-lending model 2, if the disbursement TAT goes beyond a certain weeks, your liquidity might get impacted. Or you might give that case somewhere else. The third challenge is regarding how do you move data, how do you move documents, and a couple of panel members have already touched on that. The fourth is, which is again the core issue of co-lending, how do you marry two repayment schedules? Right? How do you marry the day count convention? How do you marry the IPC or the PIC convention between two systems? And then once the loan has been disbursed, when collections are coming up, there could be audits at a bank ecosystem or NBFC ecosystem, then how is the post-disbursement compliance taken care of? Right? So these are some of the challenges. From our experience, And it's great to see a lot of platforms come in the country and this ecosystem develop in a way that people are thinking that this can be, this tech platform model can be something which will, generate the ROE for the investors who have invested. Now the thought here is that all this complexity has to be handled by one middle layer, right? Now if you think of a bank thinking of integrating with 50 NBFCs and going through this journey 50 times, or an NBFC trying to partner with 10 banks and going through this journey 10 times, it's not going to happen, right? Or it's going to take so long that the management and the shareholders are going to lose the patience. And then they will say that, look, move on, let's do something else, raise money through DA or raise money through some other product, go to the retail markets and raise money, right? So the thing is that how the TAT can be controlled. And the second thing is also about how this can be done in a seamless manner so that the cost of transition from one partner to the other is extremely low, right? So this complexity can be done by the middlewares, and with our experience of implementing across multiple investors in the country and having more than 100 partnerships live on our platform, our experience is that the protocol has to be defined, and in a lot of cases these protocols are defined by the banks. Right? So what is going to be the create loan protocol? What is going to be the collections protocol? What is going to be the documented data sharing protocol? What is going to be the information security protocol? So the bank has to take call on one platform or two platforms and give them access to their ecosystems by publishing the APIs, and then stitch multiple partnerships one after the other. And similarly for an NBFC also, because it's a source of liability and diversification is the most important thing in financial services. If you are live with one partner, using that protocol, you can then go live with the second, third, fourth, fifth partner in a matter of days. Right? Today, because our APIs are quite advanced, NBFCs can come on our platform, they can configure their LOS and LMS logics and generate an API contract within 15 minutes. So these are some of the experiences that we have had in implementing this.
Thanks, Arjun. I think you did mention about a very important point, which is, I think the need of the hour is that there has to be a common integration, parlance, and it should not be that multiple institutions, multiple integrations to be taken up. That will definitely, set the theme for the second question when we'll talk about the adoption piece of it. Quickly moving to you, Rahul. How do you think that, at AllCloud, you are helping banks scaling up the co-lending programs? And any thoughts on the integrations front which you would like to share here?
Sure, I think a lot of talk has happened on the either sides with the lenders and with the tech platform saying that the co-lending cannot happen without having an efficient integration of systems together. But to scale this platform, I would also go a step back and say when the business partnership happens, the tech partnership also should happen. The tech platform should get involved early on in the business, otherwise a photo op would happen, but the first loan to get disbursed would about 6 to 8 months down the line. And then the whole purpose of co-lending fails. So get the tech systems involved early on, because the tech platforms, like ours, understand how these integrations will flow. And it's not only happy integration that happens, right? There are rejections of cases, there are resubmission of cases, there are some documents missing which they want. All of these have to be factored in. The rejection rates in co-lending is about 25%. So 1 out of the 4 loans are rejected by the senior lender in these cases. How do we get that down? This will scale co-lending. So getting this efficient system and also getting tech platform involved early on is one thing that is very, very important. Second is standardization of data. Obviously, that the banks and the NBFCs to understand that there has to be a standard set of data that flows between the two platforms, the two systems together. And this has to be scalable, one integration after another. It should be just a replication or mere replication of the earlier integration. Otherwise, you keep spending time on integration, but the business doesn't flow. And obviously, the team gets into lethargy of project, right? The project lethargy kicks in, and then you start feeling that, yaar, Excel pe kar lete hain, badhiya hai, platform, integration chhod do. That will defeat the purpose altogether. And I know for a matter of fact that a lot of smaller NBFCs, we are working with about 100 NBFCs, they want to do co-lending. But the problem on the other side is that getting these integrated, not just from the system perspective, but also from an intent perspective, is very difficult. And we've seen our customers, one of the customers who've done it successfully, he's been able to do it with multiple lenders on the other side. Because the leadership takes interest and puts a mandate, puts a foot down and says that if I have to do co-lending and I have to do my business, it has to happen automated. I am not going to be putting teams to recon, to submit data, to prepare camps, send it to the co-lender, add a more 2-3 day of fat in terms of my TAT. That's not going to happen, right? So people who are doing it on a scale, will have to follow the, kind of a platformish approach where they say that I would integrate, I would work on these integration, and I will ensure that it happens this way. But people who leave it up and then, as I said, business does the partnership, but technology does not get involved, yeah, it will not scale.
Again, I think very important point, that intent to go live and, to adopt the platform at the right time. That's very important. Very well, taken up, Rahul, on that front. Sudeep, moving on to you. I think so. You spent, I would say, a good amount of time in the industry designing different platforms now. We talk about NBFCs, banks, platforms, middlewares, so much of a data getting, integrated. One key aspect is, which still remains one of the major aspects for the banks, at least, is the core banking system. How do you ensure efficient integration from that middleware platform to that of the bank's core banking and back to the NBFC's LMS? Your thoughts on that? And I think then we can move on towards how do you think that adoption can be the key driver for this particular path here? Thanks.
Sure. Thanks, Shashank. Yeah, you touched upon a very important aspect of integration. Rahul has talked about tech partnership. Actually, before the business partnership can work, it's a tech partnership that has to be in place in today's world. Businesses cannot run without technology support, without seamless integration of technology platforms. That's essential in today's world. So now, CBS, as Arjun has talked about, banks' ecosystems are old. The technology platforms are old in quite a few cases. But what is required here? For seamless integration, you need API-driven architecture, service-oriented architecture. You need event-driven architecture, so that whenever an event takes place on a co-lended loan at NBFC's system, immediately it can be passed on to the CBS. And as everybody has talked about, it's not a one-to-one relationship. It's a many-to-many relationship that will eventually be there. It's already there, but that's what will be there. Right from origination, you have multiple touch points between CFSS at the NBFC side and CBS at the bank side, starting with KYC norms, AML, compliances, unified credit scoring, credit policy execution, disbursement. Arjun has talked about the point on repayment schedule. That's a very, very interesting subject in itself, because if you have in a co-lending partnership, if you try to draw a bank's repayment schedule and NBFC's repayment schedule and add the two, it doesn't add up to the customer's repayment schedule.
Correct.
Calculating it other way around is also difficult. You calculate customer's repayment schedule and then try to do it. Either NBFCs or banks, actual yield goes down what you declare. So there are issues, and the biggest thing is, in isolation, these schedules cannot be drawn. You have to start with one and then derive other two. And that's the reason this integration, online integration through microservices. We cannot pass on the information with 1700 data points or 800 data points. You need microservices based architecture. And that's one of the reasons, because systems are not ready on either side. The adoption of co-lending model 1 is relatively lower, because that's where the compliance right from the beginning till the end is much higher. That's why a lot of lenders on either side are waiting, especially on bank side, for NBFCs to originate the loan, and they take the loan at a later date in co-lending 2 model. Another aspect, because of lack of integration, a lot of manual work happens, which increases the cost of operations. OPEX increases, which today may not be hurting the banks, because the co-lending book is very, very small compared to their own books. But what you cannot afford is that NBFC is spending X percentage of the book size as OPEX, and on the 80% which is held by bank, they also spend X by 2 or 0.8x as operations expense. It has to be almost zero, otherwise the whole benefit of interested benefit to customer will not happen. And that's where the role of technology platform, organizations who are providing these solutions is extremely important. We talked about data standardization, reconciliation, everything needs to be part of this tech solution, because multiple vendors, multiple softwares, multiple solutions are in picture. How do we define? And that's where we need an industry body, like we have Indian Banking Association, some other body where we have players from both sides, from business side as well as technology side, to come and define these standards for data exchange between partners. That is the need of the hour. Otherwise, the cost of integration is going up and up for every partner. And it is putting a lot of pressure on the technology partner, because the timelines are really, really quick. Everybody expects the integration to take place within weeks, 10 days, but in absence of any standard methods of communication in terms of the signature of those services, if I need to, from NBFC side, if I need to go to the bank and pass on some information, the signatures are not common. This differs even within the same software. If it is a core banking solution from one partner, the signature differs from bank to bank, from implementation to implementation. Same way on the other side. And that puts a lot of pressure on either side in terms of cost, in terms of timelines. We talked about regulatory. As Bhavna said, things are open to interpretation. Every day new guidelines are coming, which is very good. RBI is very proactive in bringing up various aspects, taking care of customers, fairness in lending. Now, the last one, or may not be the last one, but KFS. We don't have answer how KFS needs to be handled in CLM1 model. Will this KFS needs to be shared by both the partners, and they need the consent from customer? Both partners need separately, or only one set of KFS will work? There's no real straight answer available to that. So probably because of most of these, in my view, and with the experience that we have, most of our customers and partners are preferring to go for CLM2 model rather than CLM1.
Thanks, Sudeep. I think you've pinpointed a lot of key issues which are holding back CLM1 from getting adopted, and we definitely, I think, on the NBFC front. So Sharad, we have the platform team, and I was waiting for this moment to come that we all know we have to move towards microservices. We have to see the right time of onboarding a tech platform. We have to look at a configurable workflow in the co-lending platform. Now, having said all of this, and the vendors being aware about these scenarios, why you still think that CLM2 is the preferred approach? Or I would say, how can we better up on the adoption on the CLM1 model, and I think take the right benefit of what exactly co-lending was originated for?
Yeah, of course, CLM1 takes a lot of time, right? And especially in our case, customer needs money urgently, right? It's MSME, right? And they need working capital, right, for that. And ideally, they look at 7 to 8 days for funding to happen. Okay, that's why CLM1 takes precedent. Takes a lot of time. You have to convince banks or NBFC partners, right? In some cases, we are doing good job. Okay, we can do within a few days, but within our system, right? Okay, if it talks about product to product, case, right? Sometimes it takes 7 to 8 days, and a lot of documentation work happens, right? On a CLM1, okay, where customer doesn't want to wait. Okay, so that's the only limited point I would say is the customer urgency. Okay, and of course, and some of the our business happen through partners, DSA model, right? Okay, and DSA will definitely push for urgent money, right? Because they each putting case to 5 different lenders, right? So these things take priority and it create toll on CLM1. So this is the main reason I would say.
Sure.
Okay.
Thanks. I think Arjun, I'll shuffle the sequence here and come back to you where Sharad mentioned that TAT is something which is to be addressed there, and Sudeep also pointed out on the cost of integrations. How do you think that these can be better off? You have already shared that a middleware approach, something which is to be taken up at a common point there. How can that be, I would say, expanded or I would say go to the last mile of the end user? Because what we still talk about is a central level integration within the bank and NBFC. But ultimately to reduce the TAT, I think bank as a whole has to be onboarded onto that platform and the entire workforce has to be made ready to take decisions and act upon the cases coming in on a real-time basis. How do you think that scenario can be achieved here?
Extremely important point, especially on the turnaround time. And when we talk about CLM1, in addition to TAT, the key determining factor also is that how many back and forths can happen with the customer, right? So in an unsecured personal loan or an unsecured business loan, you cannot have a lot of back and forths with the customer, right? Because the customer needs money now. So the time sensitivity is high while the price sensitivity is low. While when you go to a secured asset class like housing or a loan against property, the time sensitivity is not as much, but the price sensitivity is very high, right? So in order to reduce that, I think our thought is that co-lending complexity should be managed between two institutions. The field level staff should not be exposed to that complexity. Systems have to be built and processes have to be built in a way that job is very easy for the front end person to share or capture that information and get the documents in the right way, publish it on the LOS LMS, pass it through a middleware to the bank's ecosystem. One of the way to reduce that, and it has been covered by a bunch of players, is that the more standardization that you build in the workflows, and the more early you bring in tech in these discussions, it's going to be more scalable and easy. From a cost of implementation perspective, I think it's a 4-year-old product, to be honest. So we are in November. I think our guidelines are exactly very close to 4 years old now. It's an early product that is getting developed. So the cost is going to come down over time. When direct assignment market was booming and when it started booming after 2013-14, the cost of doing those transactions initially was very high, right? There used to be a 100% mandatory audit, but now that has come down. Now people do sample audits, right? So it's a journey that our ecosystem is going through, and one good thing to be observed, and because we have implemented our direct assignment and securitization platform also in a couple of banks, the journeys of co-lending and securitization are essentially very similar, because fundamentally what's happening is an asset is moving from an NBFC balance sheet to a bank balance sheet. And the DA guidelines also today are very clear that each loan account has to be opened and the collections entries have to be passed in each loan account. An individual customer KIF has also to be opened. So the more standardization that comes up, and there is another theme to be observed. Today banks are choosing their tech platforms, right? So if an NBFC doesn't like a particular platform, but if the bank has chosen it, there is no option for that NBFC, right? Because you will have to come through that platform. So what will happen, because of this is the platforms that are well funded, the platforms that have seen scale, the platforms that are investing in talent, the platform that are investing in making their product and data security more robust, will be able to bring the cost of implementation and integrations down, benefiting the ecosystem. Thanks.
Thanks, Arjun. Well, Utham, quickly taking it, on the wrapping remarks from your side, how do you see that, a more cohesive environment can be created around exchange of data for better adoption? That is one. And I think Arjun did mention about the common platforms getting a better shape. Now, when you say that, your platform is on premise, how do you think that, that can act as a common platform, or do you think that still it is to be taken up on a private cloud deployment where it can, I would say, handle multiple arrangements from different banks and partners here?
Sure. See, we are the youngest in the platform middleware business, right? So what we've done in the ecosystem is to work with existing middlewares where with our NBFC network, we do integrate with other middlewares because they do have the presence with the banks. And it's a joint model. It's coexistence. It is all of us trying to create an impact together. It's network effects. It is also about how do we collaborate to ensure that the ecosystem survives, ecosystem thrives, ecosystem grows. But at the same time, there is value creation at both ends, right? With those principles in mind, when I think about how do you ensure you find ways to work with different platforms, different data sets, different processes, is a lot of work that needs to be put in place. But like, people have also said, there's a lot of people still sitting on the sidelines. They're still observing how co-lending is actually functioning. It is about how probably ULI is going to come out. Can we then start to think about in the future a unified digital platform itself, right? Maybe it's an idea. Maybe it's about standardizations that all of us have to get to. It is about the protocols that we can establish with different entities. It's a long game. It is not going to be easy because there is, I would say, a lot of different systems put into banks and multiple systems with different entities and different divisions within the bank, right? So data sets itself is so diverse, disparate, unstructured. Now to put all this together and then find unified ways of working is actually a very, very complex problem, right? And technology is a mindset. Technology is an investment. If it is seen as a cost center, this will not be looked at in terms of how we can create an impact for a longer term strategy. So when it comes top down, then changes come. But there are some entities which are proactive, which do changes proactively. Those NBFCs and banks will be the leaders.
Sure, thanks. Well, Rajjat, Arjun mentioned about a point that I think we have to go towards a phase where parameterization has to be looked upon. And there has to be a lot of predefined rules in place which would ultimately help the process to achieve a better TAT. Any thoughts on, how can this be achieved?
Sure, but I think Utham answered part of it saying it's going to be a long way to actually doing that, because lending in itself and co-lending is a subset of that. We've already covered multiple use cases for that, right? So there's unsecured, the MSME, personal, LAP, all of those kind of loans exist. So doing parameterization across all of those products is today I believe that's an intractable problem. You're probably going to need different sets of parameters for each one of those products. Let's take the case of, say, MSME lending. There are a lot of products and services that are already in play that should probably be used. There were some players who tried to look at MSME lending as a standalone problem, and that's impossible. That it doesn't work like that. A platform like Threads exists today, right? Jyoti spoke about it earlier in his talk, right? We should be using invoice discounting to be able to issue credit with much better data, with much lower NPAs, if we're able to do that. And a central hub for that exists. The question is, how do you use that hub? Right? Today what we're seeing minimal participation from, at least we think it's minimal participation from banks and NBFCs on the Threads platform to be able to do this. But the reason we're seeing low participation there is because their access to data, their applications coming to them rather than going to private partners, rather than going to NBFCs, is actually very, very low. So how do you increase exposure for NBFCs and banks to credit requests via the Threads platform? There is actually a product for that as well, but it's not yet in play. So so we work with that product, for example. It's called the B2B category on Bharat Connect, right? That's built to be a connector to an interface and enabler for the Threads platform. But there aren't a lot of lending partners who work with us on that today, because again, they have a very, and this is not to criticize anybody, they have a very focused approach in lending, and the creative sort of solutions that might exist right outside of their area of focus have not been a priority thus far. But we think there's a lot of value there. And if that's one for, say, just for MSME and against their invoicing,
there'll be 4 creative solutions, out of the box solutions for all of the other products that we're talking about. So if you tell me that we're in 2024, at the end of 2024 today, and by 2025, we're going to have parameterization for co-lending across these products, I don't think that's going to happen.
But I just want to add one
Sure,
point here,
please.
right? Like we just have seen that, somebody said that the unified platform is a long journey, but I do believe these exist, and there are capabilities available where right from the origination, co-origination, the middleware, co-lending middleware, which is again AI ML enabled, where the propensity of acceptance of the portfolio can be identified, and the loans can be pushed to the desired lenders. All these things exist, and again the servicing part of the thing, then the accounting part of the thing. So the entire ecosystem covers, and such capabilities are there, and I would just request all the people right here to basically adopt those systems, give them a chance, leverage the capabilities that they have, because everything is new, right? Everybody is evolving, and it's again a story of evolution to revolution, right? So everyone will mature with the time. So yeah, that would be my closing statement.
Thanks. Rahul and Sudeep, a quick one, common one to both of you. Sudeep, what are your thoughts on adoption getting more penetrated in the market? Because we bankers do understand they need to adopt a platform. We are talking about, actually the panel has given a food for thought to AFAI that there has to be a need for a common body which can at least have some transformative layers of how standardization can be achieved on that. Any additional thoughts on this front, on the final ones, in terms of adoption to be penetrated more on the ground level? And then Rahul, we can move on to you.
See, adoption will increase. There's no doubt about it, with more clarity and integrations happening. Both businesses as well as technology solution provider will find the areas and understand where all integration needs to be done. Some standard integration, once they happen, tweaking those to other solutions, other platforms will require lesser time. And finally, we'll have to move to CLM1 only, because that model only passes the benefit of interest rate to customer. CLM2 doesn't pass, and things will take shape and will happen. And I don't see any reason for not low adoption over a period of time.
Thanks. Rahul, summarize.
I think, carrying on from what I earlier said as well, I think there is definitely the tech integration will help, and CLM1, as Sudeep said, has to come in. It is not just for the borrower, but also from the NBFC's perspective, because that's where the liquidity also kicks in, that you have access to funds that can be deployed when it is actually needed by the borrower. But I think as an industry, there have to be efforts to remove the ambiguity in the entire process of co-lending. More research papers, more guidelines, more interpretations, standardized interpretations of what processes from a taxation perspective, from income recognition perspective, from NPA, reporting perspective have to come in. Because even today, if people are doing it, it is again open to interpretation, which can be challenged later on. So that's an inherent risk in this entire transaction. So if that is weeded out today by experts in the industry, and as you rightly said, AFI can do it, I think that will be something that people can confidently adopt co-lending.
Thank you, thank you. Well, I think just to summarize it on the closing remarks front, we've heard it from the lenders front who have already implemented these models, and from the platform players, we do know that we are already pinpointing our focus upon two key issues to be implemented, be it implementation of a middleware approach, or to take it on a microservices level with the CBS, or parameterization of the BREs, and I would say a common onboarding platform for the borrowers as well, where we can look at some data points on the unharnessed data which is available across the domain. Well, on this note, thank you panel for sharing your views here, and I'll just open the floor for one or two questions if there are any. I would just request you to please summarize your question and be very pinpointed, and if you can address it to a specific speaker, that would be very helpful. Just two questions, please. Thank you. Can we get the mics, please? Yeah. It's like if you can switch on the mic and point the speaker you have a question for, or if you can just throw a journal question, speakers can take it.
Yeah. And now, if there is a loan ticket size is a very big one, and one bank is maybe hasty or is not willing to to enter in it. So if there is a if there is a requirement of more than one banks or the NBFC, and the platform is to be needed in the tech size. So we have almost forgotten the blockchain. Now if the blockchain I wanted to know from anybody, if anyone has tried the blockchain for this co-lending purpose, because there is a real size risk assessment, and people, even if in the middle of the period, if wanted to enter more lenders, or some old lenders wanted to exit, is this experiment has been done?
Sure. So you want to understand about implementation of blockchain in the platforms. Any speakers would like to take this? Sudeep?
Not to my knowledge. While blockchain and smart contracts have been talked about in various technology forums, real implementation is pretty low. A real use case, and there are doubts around its authenticity, its security. So adoption of blockchain smart contract is really low.
Sure. Thanks. We just have time for one more question. If you can pass on the mic to the gentleman on the right.
Hi. So this is a general question for the panel. I wanted to ask if in the industry have we considered using ONDC and their protocols because they have common data schemas, and there's an ONDC financial services piece which is being sort of laid out because there is so much issue in terms of accounting, in terms of data integration. Has that been considered? And that would be the first part of the question. The second part of the question is in terms of the alternative credit data. I mean, a lot of platforms are focusing on that. Do you see in foreseeable future alternative credit data reducing the cost of overall the financial services product to the end customer, or do you just see it helping increase the size of the pie, which means increase taking it to new customers in the market? Thank you.
Sure. Any speaker would like to take that? So I think ONDC standardization on the...
At a Ugro, we just acquired one platform, the MyShub Life few months back. It is an embedded platform, embedded finance. There we are trying to use ONDC, okay, and we have started talking to ONDC protocols, all that, and putting those products under ONDC platform. Okay. And with regards to alternative data, of course, right? It really helps the fasting the process. You can go to underserved demographics using alternative data, utility payments data, transaction data, and it reduces your cost of operations, expedite the funding, and then you can create a good book, I think, and really helps. Okay, and in our digital lending platform or embedded, we use very heavily on that, and even our growth score engine, we have a Ugro 3.0, which we use GSTN and Bureau Banking. So we use alternate data also, and it really giving good results. Yeah.
Yeah, just to add to what Sir has just said. So yeah, alternate data and the scoring models will definitely increase the efficiency. However, when in a co-lending middleware, you have the model that we have is like you have the scoring parameters, including your alternate data or the original financial data, and then you have the scoring parameters basis on the policies of both the lenders, co-lenders, right? So that they can just see, and the model can also mature, when we come to AI and ML, they can also mature that, okay, with these alternate data, the probability of alluring the buyers are high. So all these can be a consumption to the BRE and the AI ML model scoring models as well. So yeah, definitely it is going to add up to the efficiency.
Just wanted to add my 2 cents. So yes, we're actually integrating the the ONDC stack into the consumer platforms to be able to present financial services from the banks to them. As far as the interest rate question goes, the way we think of it is to say that the interest rate isn't, so the weighted sort of, the average interest rate is not about whether it's coming down or going up. It's about finding the right rate for that individual case, right? A customization to N of 1. So what will happen is, like everybody else said, what you're going to see is more efficient pricing for the credit itself. In some cases, it's going to be lower than what it would have been without that alternate data. But in some cases, definitely going to be higher just to reflect the risk of the applicant.
I would also like to add something on the alternative data points. It's definitely going to decrease the cost for the financial institution. See, because it will increase the approval rate. What you incur as the cost remains the same whether you are approving 60% loan or 80% loan, because you have processed the loan application before taking a rejection decision. If your approval rate goes from 60% to 80%, definitely you will start earning on those 20% cases. Your interest earning would be there, but cost of origination, which is already paid, some part of it would be saved. And that's where you will save on the overall cost, and efficiency will increase, OPEX will reduce. Not only that, financial inclusion is a very important aspect. With alternate data points, credit on that will help us in increasing that financial inclusion for underserved and not served people.
Thanks, Sudeep. Thank you. So with this, I'd like to thank the audience, and thank you so much, panel, for spending up the time on a working day. Really thank the audience for the patient hearing. I know we were between your lunch, so yeah, I think so. You'll be happy to know that we're wrapping up now. Thanks. Anupriya, over to you.
Yeah. Thank you so much, everyone. Such an esteemed panel today. It is time to honor our speakers of this session, and I would like to request Mr. Shashank Sharma to felicitate our esteemed panelists. Beginning with Mr. Rajjat Gulati, CEO and co-founder, Plutos One Technology Private Limited. Please bring your hands together, everyone. Then Mr. Sharad Agrawal. Okay. Mr. Utham R, CEO, Saison, Omni India Private Limited. Thank you for being with us, sir. Then Mr. Sharad Agrawal, CO&TO Agro Capital. Then Mr. Rahul Jain, ED and co-founder, AllCloud Enterprises Solutions Private Limited. Next is Mr. Sudeep Garg, Mr. Sudeep Garg, VP, Nucleus Software Exports Limited. Next is Ms. Bhavna Sharma, Principal Consultant, Lentra. And none other than Mr. Arjun Sood, Co-Head Yubi. Please bring your hands together, everyone. We're gonna have a wonderful lunch. Before we get off the stage, I would like to request Mr. Vineet Sharma to felicitate Shashank sir. And now it's time for a group picture, please. I know we all are hungry, but we need a group picture to remember. All smiles and tech solutions together.